But the reality is Bitcoin and other assets allow people to opt out of the fiat fiasco. What's the fiat fiasco? Every single day, everywhere in the world, central bankers steal our wealth through this thing called inflation.
Yep.
Under the guise of it being good for us, right? The 2% inflation is good for you. On what planet is taking half of my purchasing power over 30 years good for me? On no planet is that good. Answers are easy. Questions are hard. That is a great question. If this is so great, why isn't everybody doing it? Well, first thing, people are, right? We have hundreds of millions, plural, people now that own digital assets. I think over half of the people in the US have in some way dabbled in digital assets. So that's pretty amazing. From 14 years ago, zero didn't exist. So it's pretty quick. And you think about an S curve, right? Get the first 10% in the first 10 years, the next 80% in the next 10 years, and the final 10% in the next 10 years. So a 30-year cycle. Right. So 14 years in, we're right at, we should 50%, which is pretty amazing. And so I think the real reason that we're not seeing more is the regulators, right? We have entered the then they fight you stage. First then they laugh at you, then they fight you, then you win. From 2009 to 15, first they ignore you. Bunch of nerds and geeks playing with your magic internet money. Stupid. Okay? Then they laugh at you. 2016 to 21, look at those nerds and geeks playing with their magic internet money. How foolish. So 2022, probably to 2027, they're going to fight, and they're going to do it through regular. They're talking about stable coins. They're talking about lenders. So here's the thing. If I put my money in a bank, I get paid 1%, 1.5% interest. If I take that fiat, convert it to a stable coin, deposit it at BlockFi, I make 6%. 6 is better than 1.5 or 2. But why don't more people do that? Well, because the regulators are trying to say that it's legal. That's a security. Like the bank deposit is security on no planet. So it's an interesting dilemma that innovators don't care. Incumbents. The inevitability of the technology has been the same really since its inception. And it's a natural evolution of computing power. We've talked about this on the show before, right? 1954 was the mainframe, 68 was the microchip, 82 was a personal computer, 96 was the internet, 2010 was the mobile net, and 2024 is the truth net. And blockchain is simply going to replace trust with truth and will disrupt all of financial services. So it's definitely going to happen. And all of these financial services companies are waking up to that reality and they're embracing. So that's not surprising at all. The question of whether we're at the bottom or not comes down, I think, to this. If you look at the last cycle, we had the big drop from 20K down to 6K from December of 17 to November of 18. And then we had one final cathartic, again, face melter the wrong way, down to 3,200. And about 3 months ago, I tweeted out, we were stuck in this descending triangle pattern at 30,000. We're making lower highs, bouncing off 6. And then on November, I think it was 7th or something like that, we fell to 3,200. And I said, look, the longer we stay at 30, the more chance we're going to 15. 4 days later, we hit 17.5. And is that 15? I think it probably is. Now, from November of 18 to kind of April of 19, we kind of bounced around 3,200 to 4,200. And it took a while to then start, crypto summer. And I think the same thing's going to happen here. Crypto spring will last probably from now through middle of Q1 next year. Then we get the 9-month anticipation of the halving in kind of January 2024. and we're off to the races again. So every time we hit 24 since June, there was massive selling. I mean, massive selling. Like, who the heck is that? I thought all the leverage was done. So that was a little disconcerting. And now we're making this bounce along 19 to 20. But the longer we stay around 20, there is an increasing risk of one last cathartic puke that would take it all the way down to the 10 to 12 range. I don't think that's going to happen, but it's a non-zero probability. And so I wouldn't put all my capital in today. I just wouldn't. In fact, I say that all the time. You should never do that. While I was on TV, I mean, you're only on 6 minutes, right? In the 6 minutes I was on air, Bitcoin went from 10,000 to 8,000 in 6 minutes. Mm-hmm. And Melissa Lee says, what should we do? I'm like, buy it. And just this look of incredulity. And so what do you mean? Well, you'd always say that. I'm like, no. Yes, I would. Buy it today, buy it tomorrow, buy it next week, buy it next month. Don't buy it all at once. But every week or every month or every two, I don't care what the periodicity is, but take whatever percentage you're going to allocate. If you're older like me, right? 3, 4, 5%. If you're young, I don't know, 5, 8, 10, 15%, maybe more. Yeah. Figure out what that is, your net worth. And if you're young, you got to do the calculus of saying, well, my net worth's going to grow because I got income and future and I got appreciating assets. So that's got to be a bigger number. So, but don't do it all at once. You can print the headline, but you can't stop it. It's like you can't ban a decentralized asset. You can't stop a decentralized network. And so, look, China banned Bitcoin. And I think China still is 20+% of daily transactions or something
large
like
and
that.
Still a hash rate too.
Yeah. And so, but they banned it. Well, no, they didn't ban it. It's like when they made gold illegal in 1933. Did people stop owning gold? No. Did everybody turn it into the government? No. They kept it. So the idea of crypto is anathema to the United States because the United States, as the world reserve currency, can weaponize the dollar. But the reality is Bitcoin and other assets allow people to opt out of the fiat fiasco. What's the fiat fiasco? Every single day, everywhere in the world, central bankers steal our wealth through this thing called inflation.
Yep.
Under the guise of it being good for us, right? The 2% inflation is good for you. On what planet is taking half of my purchasing power over 30 years good for me? On no planet is that good. So it's a farce perpetuated starting in 1607 by the Rothschilds and the Bank of the Netherlands, and then the Bank of England in the 1700s, and then the Fed in 1913, and all the other central banks around the world. And it channels the wealth up to the elite, okay? But if you're down here in the middle of the pyramid, you can actually say, you know what? I opt out. And the average person got wiped out, unless they took those bolivars and put them into a digital asset. Here's the funny thing. In Venezuela, there's never been a bear market in Bitcoin. The price of Bitcoin in bolivars has never gone down. It only goes up. Same thing in Turkish lira, Argentinian pesos. The problem is we, Americans, only look at Bitcoin in dollars.
Compared to the US dollars.
And there is fluctuation in price because the dollar can be manipulated and because markets, traders, speculators, gamblers were allowed to borrow and buy the asset. That caused speculation in the price. And then we have futures markets. And the futures market allow prices to be manipulated. That's why gold has been so troubling over the last 10 years. It should be much higher. Gold should be much higher. And it's not a coincidence, Paul, that the bear market in Bitcoin started in November when they approved the Bitcoin futures ETF. Had they approved a Bitcoin ETF, a spot ETF, we would have had a bull
would have never
market.
started. Would have never started for sure.
But the fact that you can short the future with nothing against it. You can be naked short. It allows for spoofing of the price, right? Investing, Paul's the only business where when things go on sale, people run out of the store. In every other business, you put stuff on sale, people run into the store, right? They'll run over each other to get into Black Friday sales or wedding dress sales at Filene's basement. I mean, they'll bludgeon each other. But you put stocks or crypto on sale and people run out of the store. Sam is doing what you should do, right? Stay in the store and buy the cheap stuff. So, but the thing about it is you need three things to be a great investor. You need conviction, courage, and cash. You get conviction from doing the work. You get courage from just, mental toughness. But cash, you got to have it. So if you don't have the cash to buy the cheap stuff, it's harder. So, he had all three. Investors should be looking at the range of outcomes, and it is a range, right? We don't know any one thing is going to happen. Is it possible the Fed did their pivot on Sunday evening and they're not going to raise rates anymore? It's possible. Then there's the outcome where they wanted us to believe they're going to pivot, but they're still going to go through with it. Then there's the really, bad thing where the sinister stuff where they actually go worse, right? They surprise to the upside and do 100 basis points or more. So I think that is a low probability scenario. I think the middle scenario, you could break it into two. They do the 75 basis points. I think that's low too. They do less, 50 or 25. I think that's a really high probability.